Hello, folks, and welcome back to another episode of Money in Motion. Today, pretty nice Tuesday, better than yesterday at least out here. Monte, how's the morning going? Anything you would like to start off with?
Well, there's lots to talk about, and I can see it. The people in our comment section are already getting to it and telling us what they're trading, whatnot. But I'd like to start by saying good morning. What's up, Ross? What's up, Mike? What's up, Jenna? What's up, Ryan? What's up, everybody else who's watching that hasn't commented? Hope you're all doing well. And yeah, so as the title implies, one thing that I wanted to talk about today was the 10-year Treasury note and how I'm kind of using that to shape my bias in terms of positioning. Why is that making you laugh, CJ?
Because it's been going down only, I think, right? I mean, didn't TLT hit like a few month low yesterday? Here, let me... Because like ZN and ZF had just been getting destroyed. So
10-year...
I mean, it is trading at the lows. It hasn't made a new low, but it is trading at the lows.
Yeah, TLT does not look good. And I would argue that the 10-year does not look good either. The TNX. I talked about it yesterday how in previous instances of extended periods of positive price action and then a correction, that's when we see actual genuine positive price action come in, the market really rally. This essentially marked the bottom, and we haven't really slowed down since. So the TNX is undoubtedly important. And for me, this is the breakout level. Will we get there is the big question. And looking at today's candle, I don't think we do. I think we go risk off for the next 2 days at least. And we see a bit of a pullback here in the TNX back down to around the 4 level. That would be right around here. I think that's a very plausible scenario, especially when you consider the fact that the VIX is spiking hard today, up 10%. That tells me that we're not going to see a whole lot of risk on price action today. In fact, if you were positioned, Ryan says I'm getting short. I don't think that's a bad idea. I don't think that is an irresponsible choice in any manner. Pick your assets wisely, of course, but from a broader term perspective, when looking at the TNX, the DXY, and the VIX, they're all kind of giving us short signals right now, CJ. So I know you're in some short positions. I know you've been, watching those indices as well. Anything in particular that you think looks favorable as a play on this Wednesday?
Yeah, I mean, I think it's more of the same. It's tough to enter equity shorts right here. I mean, like I said, kind of outlining in the weekly report, like things like Dow and ES were, technically short, but I just didn't feel that like those were the best plays. I still think probably the better short trades are in things like energy and like just stuff that doesn't have positive drift. I feel like we talked about this a lot, but let me just pull up some charts to kind of illustrate what I mean.
It's worth reiterating always. I mean, because people do try and short. It's always like, you try and short the stock that's up the most, and that's not an advisable strategy because of upward drift. You're basically swimming against a river that's moving at 6 miles per hour or 6% a year,
Yeah, and one of the examples that one of my favorite traders, Jason Shapiro, talked about is like he did very, very well in 2008 when he was trading for his CTA, but he was never short stocks because he just didn't get a signal. Yet I'm pretty sure he ran this cotton trade from like 70 all the way down to, I think, 50. And if you catch like 2 or 3 trades like that, where you're capturing a multi-day or even a multi-week secular trend, you only need like 3 or 4 of those a year to have a really nice year of like 15 to 20%, in my opinion. It's really amazing how catching some of those secular trends and like riding somewhat boom and bust cycles can really help your account without having to take a lot of risk in the long term. If you're only risking like 70 basis points in a particular position. But if we look at like heating oil, a lot of the shorts tried to get in last week because kind of in that principle, like you said, Monty, people try to short a lot of stuff just because it goes straight up.
Yeah.
That's not really a great reason to short it. However, in this particular case, it was getting really crowded. One more short squeeze looks like it did bears in a little bit. And now, we are coming off a little bit in things like heating oil and crude oil. So, I'd just rather remain in those shorts and not really have to work. And Nikkei as well. Like we talked about Nikkei yesterday, and I talked about shorting that. So it's like, I'm already kind of positioned that I don't need to pick out equity shorts at this point if risk off price action is going to continue. I feel like I have enough exposure already. Cocoa coming back a little bit today, but like this is another example of the boom and bust trade. Like if you get, instead of trading in like intraday, which I've done before, and it's very frustrating and very mentally just exhausting, really. But like if you can catch a trend, after these boom and bust cycles, this is what Soros used to do. He'd ride the boom on the way up and pick the inflection point. He did that with the dollar in, I think, 1985 and made like 125%. That was like his best year ever. But catching a trend like this, if we continue lower and end up at like 2,800, that's a really, that's a good 3-4% addition to your portfolio over an entire year. And that can really, aid in like the goal of making, 10 to 20% or whatever you're absolutely going for. But that's kind of what I'm looking at. I mean, I don't think it's a bad setup in terms of like COT to be short like ES and things. I also think NASDAQ is probably the best hedge long to like a short in ES because, I mean, based on the way it was trading earlier, is NASDAQ still lagging to the downside?
Slightly.
Yeah, okay. Now they've all caught up. But at the open, I mean, you still see Russell selling off more than like big tech and other stuff. So that was interesting. But
Yeah.
I mean, that's basically all.
Yeah, that is interesting, and it's definitely worth noting. I mean, and another thing too is like if you look at all these indices, they're all coming up against major critical levels as well. I think if you look at like ES or even the Nasdaq or the Russell, like all of the levels that we're touching today are levels that were tested previously in the week and also were tested as resistance earlier or at the end of June and towards the middle of June. So will this level hold as support? I think it's a major question. And tie that in with the TNX and whether or not it's able to break above 4.35 where it failed to break above last time. That would be major risk off like that for me would be like a massive red flag that I should be getting risk off, taking profit, and looking for, just a safe 4% yield in a brokerage account. But if we get that rejection and we see a bounce here, I don't see any reason why the S&P can't make new all-time highs, especially if people get caught up in playing the game that they always get caught up in playing. We talk about it all the time. An asset's up so much and they try and short it and it just squeezes higher. I think that is still a possibility. And there's still so much bearish rhetoric. And until that changes, it's hard for me to, as a contrarian trader, it's hard for me to take on a bearish position because everyone and their grandma is like saying, oh, the market's pulling back. The economy's terrible. I'm going to buy some puts and I'm going to get rich. Whenever that is the case, it tends to not happen. And it tends to move in the opposite direction. So I'm thinking that like everyone right now is flipping short, and I think it's just adding fuel to the fire for a potential squeeze to the upside. Um, Now, when will we get that? I don't know. If the S&P breaks down below 4450, I think we may see a lot of like triggers for entry in terms of shorts, and I think they might get blown out tomorrow. Um, based on just some, either sideways or slightly positive price action. Because last thing I'll say is that, a lot of people entering these puts are probably expecting the S&P or whatever they're trading, the Nasdaq, to pull back with the same velocity at which it went up. You cannot make that assumption. There's no reason to make that assumption. And with options, that's very important because when you're buying puts, you're dealing with time decay. And just because an asset made it to its 52-week high in 30 days doesn't mean it's going to retrace in 30 days as well back to where it was previously. So you need to take that into consideration as well. It might be a slow bleed. In fact, I think if we are to see bearish price action, that's the more likely scenario. It's not going to be just a retrace of what what we saw on the way up. It's not just going to be this. It's going to be something more like, where we kind of just chop down, chop down, chop down, chop down. That is the situation I see. And even in this scenario, puts get absolutely destroyed by time decay, depending on how you're positioned. So be wary if you are looking to short, because I don't think it'll basically anything will pull back with the same velocity with which it went up. So you need to watch out for that time decay, because that will become a very significant factor as the trade develops.
I think I'd feel safe betting that like 95% of retail traders who buy options don't actually like understand the Greeks or
Oh, no
and it's
doubt.
difficult, right? Like you don't many times when buying options, you don't actually know what you're paying for in terms of the implied vol that's attached to the option pricing model. So I think a lot of situations where like, oh, I want to buy calls or oh, Marcus looks like it's going down, I'm going to buy puts. Most retail traders would be much better off suited just trading futures where all you really have to do is just set it, pick your stop, and then forget it. Whereas options, they give you flexibility, but I think they're more toned for like specific situations or specific catalysts. That's why you have so much insider trading in the options market. But yeah, I think if people actually discovered futures or if Robinhood had futures, we'd probably have a lot of less options trades.
Yeah, I think the market would be roaring to the upside if we had perpetual futures on Robinhood. That would be pretty awesome. But I just don't see how they'd make any money doing that. They're happy to counter trade or sell their order flow and whatnot. So um yeah, if you ever need any help with options or anything, or if anyone needs a refresher on the Greeks, or if you want to learn how to put on an iron condor, if you want to learn how to sell a put spread, or sell a call spread, buy a put spread to position yourself short, I'm always in the Discord, and I'm more than happy to talk with you and walk you through it. I've actually started creating an education curriculum around specifically options and the various strategies, when to apply them, and then I'm searching for historical examples of when they are, or when they would have been the best uh, option strategy to apply. So I've already knocked out like 8 of the courses. We just need to make a landing page for our website where the courses can live, and I'm gonna record a video to go with each one. But like I said, in the meantime, definitely head over to the Discord if you have any questions. I'm always happy to help you out. And that goes for you
Yeah,
too,
a lot
CJ.
of good, a lot of good stuff. A lot of good stuff there. I remember trading this horrible BITO illiquid just options, and I bought a call spread and price. This was right after SVB, so like this is when price went down, very quickly. Fortunately, it rebounded, but at the time, my options I think went down over 115 to 125%. And I'm looking at this, and like the trade is negative.
How's
Trade is
this
negative,
possible?
and I'm like, how is this possible?
Yeah.
I'm in a spread. How is this possible? And the options, they will come to convergence by expiration, but at the time,
Yeah.
they were imbalanced and they were negative. So,
I'm only laughing
knowing
because that's happened to me too before, and I've been like, I'm like, am I this bad? Am I this bad at trading? I'm losing more than I bet. Like they're gonna send like a repo man to my house, but
they do.
yeah.
Yeah, I was watching some. Just a side note, I was watching some like Wall Street bet losses. And there was,
Oh, are you about to talk about control and narrative?
well, how could we not? But no, not in this particular case. It was just that this person had been trading on, I don't remember, but it was like a legitimate brokerage, like either TD or E Trade, and they sent him this letter at the end of the month saying, and this is after he lost like $500,000 day trading and just doing like dumb stuff. And they sent him, they're like, "Are you satisfied with your investment goals?" like basically saying you need to stop doing this,
Yeah.
man. You're going broke.
That's funny. That's funny. Yeah, I wouldn't expect a letter like that from Robinhood, but from a more legitimate exchange.
No, they'd be like, "Hey, can you deposit another
Yeah.
$500?
It's like, hey,
We're
you
gonna
had a
charge you."
great year. You had a great year. You lost 500K, but we don't care. Anyways, oh man, gonna be an interesting couple of days here. Interesting day today, I think will for sure. And as always, CJ and I will be hanging out in the Discord. And if you guys, oh sorry,
Yeah, I want to. So one thing that I want to start doing. This will be the last thing, and then
yeah,
we
go
can.
for it. Take your time.
Yeah. So just like taking a look at the watch list, something that I wanted to add and then go over a lot more in the future is the idea of just like looking at the economy or the market in terms of sectors to get an interesting idea of like health. Because something that we have been talking about, when you look at like hedge funds, and hedge funds have been very unprofitable this year in general. They went into the market the year, record levels of shorts. Then after, KRE and SVB, all of that stuff, they shorted XLF, which had a great run, the financial sectors. And then what has recently been crowded was energy, which is XLE. And interestingly enough, like this is the most underperforming of the sectors during this particular day. Now, that of course that doesn't have to happen, but if the market was to go down on this particular day, judging by all the longs that were in the energy market earlier in the week, it's interesting to now see that like that's how it's playing out within the market. So, I think looking at like sector plays like this is somewhat interesting and something that will probably follow. But
Yeah, and to your point about like gauging market health, like I think that is the best way to do it. We also just last thing, we talked yesterday about Target. They had earnings this morning. I'm not exactly sure on the numbers, but I think they missed to the downside. And if you pull up Target's stock, it's TGT.
oh, I
I mean,
remember Pete Najarian, baby.
oh yeah, boots on the ground
TGT.
research. Like yeah, so the numbers haven't come in yet on TradingView, but the way the market's responding looks like the numbers were negative. This thing is lingering around the lows. I like to trade around earnings. That's what I said yesterday. Is like I don't like to bet on earnings. I'd rather trade around earnings unless I've done my research into like the revenue of the company for that quarter. Like I had done that one time with Roblox. I usually just reactively am trading. I'm not making predictions about whether or not it's going to beat or it's going to miss. But with Target here, I mean, it's just so interesting to me to see it at lows because, like, I know this is totally anecdotal, but I go to Target all the time to buy my precious cards and whatnot to look for card
Yeah, but
hunting.
think about Amazon and their earnings and the
Yeah,
comparison.
that's the thing is like, brick and mortar, like, is it really that like that relevant anymore? I think Target and Walmart, they're doing what they can. Target does a lot better job, I think, or has done a better job of transitioning to like e-commerce than Walmart has. Like Target, I've actually used a feature where you can like pick up and you can just drive into the parking lot. And, like a guy literally walks out and puts your groceries in the back of your car. It's super convenient and it costs nothing.
Monte doesn't call the delivery like when he's delivering a pizza. He does it in the website. He doesn't even want to call the person to talk to them.
I hate talking to people. They're all incompetent. No, I'm kidding. But I don't want to talk to people on the phone. It's just don't call me. Don't call me. Just text me. But yeah. So I'm limiting my human interaction. And I'm ordering my Target stuff online, and I think that they've done that well. So to see the stock at the lows like this, people might think that, oh, retail stores are not particularly healthy, and everyday people aren't shopping. I don't think that that's the case. I think this is more like speculative, but we will find out as those earnings numbers do get solidified. So we'll see what it looks like. But that is all I got for today. Anything else you want to add, CJ, before we wrap things up?
No, just trying to be patient here. I think this could be some interesting beginnings of some trends. So, yeah, I think we're just kind of in an interesting period here, and got to. I'm waiting until CJ gets short. I'm probably not going to get short equities. I'll just remain with the positions I have. There's no need right now.
Yeah, sure.
So, anyways, hope you guys really enjoyed. Don't forget to check out tradethechain.com for a 14-day free trial to hang out with Monte and I and Nick and Alex and many of our very good veteran traders and friends in chat. Also have sentiment data for cryptocurrencies and equities coming in hopefully the next month or two. We'll see. Got to talk to Alex. I should probably stop shilling that. But yeah, see you guys tomorrow, and take care.